We're here in Hong Kong with Simon Loong, the founder and CEO of WeLab, a leading Asian online lending platform. Simon, great to have you with us today.
Thank you, Henry.
You're one of the first unicorns of Hong Kong. What is, you think, the biggest difficulty a fintech startup has to actually try to become where you are as a unicorn today?
I think the biggest difficulty we encountered over the course of the last 5 years is as soon as we got the product tested out in Hong Kong in a much smaller, concentrated market, how do we actually scale it up? Now, Hong Kong is constrained by the population of 7 million.
Yep.
But as soon as you want to scale up, if you look at a consumer internet fintech kind of company, you need massive consumer base because you're actually making smaller margin than a traditional bank.
Yep.
And so you need to multiply to a much larger population. So at that time, I think what we're looking at is a couple of markets, right? Look at China, Korea, Taiwan, Singapore, Indonesia, Malaysia. And what we found at that time, right? Regulations is extremely difficult in every single country because it's such a new thing. A lot of countries don't even have the ability to give out non-bank lending license, right?
Yep.
And so what we're saying is, okay, every country is difficult as the next one. So we are going to pick the one with the biggest upside. Because anyway, we need to throw in our 200%, right? So at the end, we picked the closest one, which is China.
China, of course.
And I think we made the right choice. We entered into China right about a time when mobile penetration is picking up and also fintech is gaining popularity.
Well, on that point, Simon, one of the big discussions we have even this week at the Hong Kong FinTech Week is the Greater Bay Area and the potential it's allowing. What's, from your view, the opportunity for fintech startups, not only from in Hong Kong, but around the world with this Greater Bay initiative?
I can share a little bit about our experience, right? I think when we look at Greater Bay Area, I think number one is talent. Now, fintech has to be a strong balance between technology and financial services.
Yep.
If you have too many bankers, you build another bank without a license, without a balance sheet, it doesn't work.
Yep.
If you're a tech company, you don't have banking experience, risk management, compliance, it doesn't work either. So you need a good balance of it. So what we've been doing is how do we combine the best of the banking talents in Hong Kong and the best of the tech talents in Shenzhen? Because of the proximity, 1 hour door-to-door,
Yep.
with the latest Hong Kong-Zhuhai-Macau bridge, high-speed railway, it drastically reduced the cost of communication. People will go up and down and talk to their colleagues a lot more often. And that is, I think, the first thing, right? The second thing is we can always use Shenzhen as the door, entry point to a much larger 1.3, 1.4 billion market. The reality is the north and the south of the Shenzhen River, consumer behavior, the kind of apps they use is very, very different. Right, so you need to be able to be inside mainland China to access the local talent and through which they can actually help you to get more customers. I think that is the next point, right? But I think the last point, which I think we would hope to see it building up more, is a very close, single, united ecosystem across China and Hong Kong fintech companies.
The Greater Bay opportunity, right?
Greater Bay opportunity.
Well, Simon, thank you very much. Good to have you with us today.
Thank you, Henry.